Great. So, perfect. Thanks a lot, everyone, for being here. It's actually quite excellent to see such strong enthusiasm and passion for critical minerals, which is such an important topic for the energy transition and providing many economic opportunities for the future. So the IEA, which has traditionally been an energy organization, started from the oil crisis in the 70s to provide energy security, has moved to critical minerals being a core part of its mandate since about 2021 because of its importance in the energy transition and for clean energy technologies and energy security going forward. So as part of that, we do regular market analysis, outlooks, and as well are developing a critical minerals security program for our member governments. So if you're interested, please come speak to me and I can tell you more later throughout the day. So today I'm just going to give you an overview of the market trends that happened in the last year and our future outlook for supply and demand, risks, and other kind of key factors. So the main story of 2023, as many of you will know, is the dramatic fall in critical mineral prices. So critical minerals, particularly the battery metals, spiked in price 21-22. Lithium price increased over 8-fold since the start of 2021 to the peak in 2022. And this was due to supply underinvestment and demand being extremely strong. But then why did prices fall so dramatically over the last year? Losing almost all those gains. And this was not because demand has actually been faltering. Demand is actually very strong. Lithium demand 30%, nickel, cobalt, graphite, rare earths, between 8 and 10% growth. It's because supply actually came online quicker than expected. There's many emerging new areas in Africa, Indonesia, particularly nickel in Indonesia, that came online much quicker than people expected. So this is what has caused the prices to drop. And what could be a concern of this is with low prices, obviously can come supply underinvestment again. But so just looking at the investment trends, investment has actually still been quite strong despite the much lower prices. There's 10% growth, yes, less than 2022, but globally still impressive, with lithium specialists seeing the highest investment spending, which grew 60% despite the massive drop in prices. But you can see on exploration spending, that's still pretty robust with 15% growth, and that's really been led by Australia and Canada, which are two key sources of potential new large supplies. So this is quite encouraging trends that despite the much lower prices, investment is still robust. But there are two sides to these price declines. So price declines does mean the prices of clean energy technologies that these depend on become cheaper and more affordable. So EV prices, battery prices have dropped, which is reversing a concerning trend in 2022. With the spike in critical mineral prices, battery prices actually increased for the first time in history, and that slows their competitiveness with internal combustion engine cars. But with this massive price declines, we see that the overall clean energy technologies become more affordable, which is great for deployment and consumers. But on the other side of that, it is bad for mining investment and diversification. As we know, we're about to see massive growth in all these key critical mineral demand for all these key minerals. But what this has meant is when we look at all the projects that have been at risk from these low prices that are struggling, almost 3/4 of them, I'm looking at nickel right now, are the ones outside of the dominant producers. So that means anything in diversified supply, talking like Australian nickel, these kind of projects, are really struggling with these low prices. So this is the two sides, this double-edged sword of the low prices, and we're seeing, and there's very few projects that are actually at risk in the major producers, which again shows this challenge with the low price environment. We still have seen major growth across all clean energy technologies. So the growth is still there despite the economic challenges and despite other challenges going. Solar almost doubled in capacity in just last year. Wind has picked up after a bad year in 2022 and a tough industry environment. EVs is still robust growth, 35% growth year on year, and that's a maturing market. And battery storage, which was actually the fastest growing clean energy technology last year, more than doubling, having doubled the previous year before. So the trends for clean energy deployment are very encouraging. And what this means is that the demand for critical minerals is also increasing. So now this is moving to our outlook. So I'm showing here in our net zero by 2050 scenario. So this is how to meet emissions being net zero by 2050. This is the kind of mineral needs there are. And one of the main things you can see is the growth is all coming from clean energy for all these key critical minerals, from copper, lithium, nickel, cobalt, all the way through. And this is showing that the main demand driver in 2040, 2050 is actually clean energy for almost all these minerals, which is a major change in these markets. And you can see also, I want to highlight some of the demand growth for some of these minerals is quite exceptional. Lithium, 9-fold alone by 2050. And this is because of its indispensable role in lithium-ion batteries, which are obviously so important for EVs and for battery storage. Graphite also as the anodes for lithium-ion batteries, which are one of the key constituents, so 4-fold growth. But really major growth across all these key critical minerals, with copper, of course, having the largest volume growth, because copper is critical to all electrified technologies, and that is a key part of clean energy. So the key question really is, do we have enough supply, and will we have enough supply to meet all this demand? So right now I'm showing not in a scenario that meets net zero by 2050. This is just announced pledges scenario, which means a scenario to just meet government's climate targets. That doesn't have to be net zero by 2050 at all. And this is the demand for these minerals that we model is needed. You can see in the shaded area at the top, that is the amount we model that can be met by recycling and reuse. So if I take this away, this is how much mining needs to meet, and needs to meet in 2035. So looking at the project pipeline for these critical minerals, we have two supply cases. A base case, which are projects we have a lot of confidence in based on financing, feasibility studies, etc. And we have a high production case, which are projects that could come online, and we hope, but they're much more in their infancy. Now, the big concern are these two minerals. So the key challenge right now is that copper and lithium have major supply deficits forecast. So you can see for copper, based on the announced projects, it only meets 70% of the demand that's expected in 2035. And copper is a particular challenge because, unlike many of these other minerals, it's an established industry with declining ore quality. So capital costs are going up, and projects are just harder, of higher quality to find. The average ore grade for copper has fallen 30% in Chile, the leading producer, since 2005 to now. So that's a huge drop in ore quality and massive increase in capital costs. So that's a real key concern for us. The other one is lithium. Just the enormous demand growth of lithium means announced projects are not enough right now. Like, it only meets 50% of the demand expected. So this is a key other concern for us. But lithium projects have recently come online a lot quicker than expected. There's new growth areas, Argentina, Zimbabwe, so that does give us some hope. The second group are nickel and cobalt, where we see in our base case, we do see the market is undersupplied, less so than the others. But in our high production case, projects could meet the demand. And so we are concerned, but the market might be relatively tight, but it's at least promising. And the final group is graphite and rare earths. Now, these are actually very well supplied based on announced projects, but they have a very different set of key challenges. And the key challenges there is market concentration. As you probably well know, China is the absolute dominant supplier for almost all battery-grade graphite and rare earths. So it's market concentration. The risks that come about there are very different. I'll show you more on that as we go. So looking now at diversification of supply. So the supply of key critical minerals on both the mining and refining side is extremely concentrated. It's more concentrated than that, the supply of oil and gas. And we understand how the geopolitical consequence of that. So looking here at refining projects, what you will instantly see, and this is 2023, 2030, and our 2040 based on the project pipeline, you see very little diversification happening. A sea of red, which is China's dominance of the refining sector. It is the lead processor for almost all these minerals, or Indonesia for nickel. So we see little progress in diversification. The growth, about 3/4 of all growth in diversified supply, or in new supply since 2021, has just been in the major producers. So this is a key challenge to change, and it comes with challenges with, again, these low prices. But I think we should also look through the ends of ownership. So it's not just about where these mines or mining is taking place, it's like who owns this. So on the mining side, you can see like for lithium, copper, major players, Australia, Chile, actually they don't own all their operations and they're not the key owners. And the issue is even more stark for cobalt for the DRC and Indonesia for nickel. So despite being Indonesian nickel supplying over half the market, Indonesia companies are the majority owners for less than 10% of those operations, and it's 5% for DRC companies. So the key question is who owns all of this? It's mining, and I'm guessing you probably know. It's China. No, it's the vast majority. They've huge investments over the last years as part of their industrial strategy have led to, particularly DRC cobalt and Indonesian nickel. This is their major dominance in the sector. They've been the majority owners and the majority investors. Though there is some, encouraging news that European companies, despite Europe being, a pretty small fraction of supply and not having the resources, European companies such as the majors like Glencore do own quite a significant proportion of mining across the board, and the same is true for the US. So there are some encouraging signs, and this does show there's some difference in the picture depending on ownership versus geography. But despite that, the concentration on both sides is very, very clear. So now just to show you an entire key supply chain, that's all the way to the downstream to show the level of concentrations we're dealing with, I'm looking at the battery supply chain. Again, just you can see the concentration on the mining side, as I just spoke about, but the entire downstream, midstream EV battery supply chain is dominated by China. And we've just seen recent news with Northvolt and its challenges. So this is a sector that is, this shows the kind of clean energy supply chain as example, which is very similar for many clean energy supply chains, solar and many others. So from over 85% of cathode anode material, batteries, and even 70% of EVs are made in China. So this really shows the kind of state of play we're working with. But we do see there's a lot of opportunities going forward. I mean, Australia, Canada, as I mentioned before, have lots of key supplies of minerals, but we are looking at some of the market value of could go ahead going forward. So the whole critical mineral space is about $325 billion right now, and we see in a climate-driven scenario that moves to about 800 billion in 2040. So here you see Latin America, Indonesia, Africa are key winners in this on the mining side. But on the refining side, it's based on the project pipeline. China is the key kind of winner. Indonesia also seeing major growth, but it's still really dominated by China space. I think another way to look at this kind of picture is using resilience analysis. So resilience analysis, or N-1 analysis as it's called, is often using gas markets to understand vulnerabilities in the system. So this is where you take away the largest supplier, the number one supplier. So imagine there was a supply shock or geopolitical event and you can't get that supply. How does the supply-demand balances and how concerned should we be? So for copper, it's actually not, it's quite reassuring. So China is the largest supplier of refined copper, but it's also the largest consumer. So if we take away its supply and demand, material balances are actually quite okay for the rest of the world. The issue is quite different with other minerals. So nickel, Indonesia, the largest supplier, but pretty small fraction of demand. So when we take it away, the balances are quite poor, like there's a big supply deficit. And look, in the EU Critical Raw Materials Act has a minimum target that no single country can provide more than 65% of single supply of a critical mineral, which means 35% must be met at minimum by diversified countries. So if we apply that, you can see nickel just about kind of makes that threshold. But for graphite, the battery-grade graphite, the issue is far more stark. So when you take away China, who is the leading supplier, the actual supply that can be met by the rest of the world is 10%, much less even than that threshold. So these are some of the key concerns we see around concentration. And we've seen export controls be put on battery-grade graphite by China in the last couple of years. And so these, those are some concerning challenges, and the importance of diversification are really, really key. So we've also done a risk analysis based on all the kind of projects and many indicators that we have and all the data, and on 4 key dimensions: supply side, the geopolitical side, barriers to respond to disruptions, and on the ESG side. Here you can see, as I mentioned and emphasized, lithium and copper are particularly concerning on the supply side. Geopolitically, due to the concentration, much more the graphite, nickel, cobalt, rare earths. And then, you see on the ESG side, it's a pretty concerning space as well, which I'll show you some more data on later. But overall, the lithium, graphite are particularly concerning for us right now. But this just shows us, if you want to read more, our report this year on the Global Critical Minerals Outlook has it all in depth. Now, there are other things that can be done, that particularly for key consuming countries such as the EU, US, UK, where we're not as abundantly sourced with resources. We do have, but recycling plays a key role and can play a major role, because where does all this end-of-life clean energy technologies end up? They end up in our countries, and that's where they reach end of life. And this is another key source of critical minerals. So scaling up recycling can have major benefits for supply security and for accessing a new source of supply for many consuming countries. So we model it really, if you look at actually the past recycling rates for these key critical minerals, it's been pretty stable for most. It's not really improved for copper and these kind of aspects. But battery metals is encouraging. It's starting from a low base, but it is increasing rapidly. But we see if collection rates can really be ramped up, and so that's key policies being put in place, the key investments, that really can scale up the share of recycling that these minerals can meet of total demand to really impressive levels, to up to 30%, which is quite impressive. The other side of that is, if we don't scale up recycling, the amount of investment needed in the mining sector can increase dramatically, and so you need another third more investment in the mining sector. So this is a kind of a key area of opportunity for consuming countries, and also can reduce mining needs, which obviously has some environmental benefits. Just to highlight this point further, so this is kind of, again, mining needs all the way to 2050. And with a ramp up of recycling rates in our scenario to meet climate targets, you can reduce copper mining needs by 40%. Now, with the challenges that copper has with declining ore quality, which I cannot stress enough, this is a really key area. So it's about scaling up the collection of legacy copper, old wiring and construction, and many other things that need to be really targeted. Same is for the battery metals, 25% for lithium, around similar for nickel, and 40% for cobalt. So this is a huge amount of global demand that can be met by recycling through key policies. Now, we've just released 2 weeks ago a special report on the recycling of critical minerals, and I'd advise, if any of you are interested, to have a look at that report. We look at the key policies that are needed at a sectoral level and at a global level to kind of really scale this recycling up with lots of data and analysis. So now there's other sides to addressing these kind of supply challenges that aren't just on the supply side and recycling side. So as we know, there's going to be enormous demand growth. This is just lithium by 2030. You can actually see that there are demand side measures that can really be done. So also including recycling, which is key, but by 2030, not many EVs are coming off the road by then, so that's not going to be the way you're going to meet it. But technology change, so moving to sodium-ion chemistries, which don't use lithium and work actually pretty well, again, is a chemistry being utilized more in China, but that offers some potential to relieve some supply pressure. And right-sizing of batteries, EV batteries are typically oversized for the journeys people need. These sort of demand-side measures can also have impact. But yeah, they do take some behavior change and some other challenges, but just to show there are other measures that exist. So now looking at the environmental social governance side and how it has been progressing, because as we all know, and as was mentioned earlier, that the mining suffers from reputational issues, and it does need public buy-in for these investments, and it does need to show improvement in these ways. And we've tracked 25 of the major mining companies and systematically looked at this in the space, and we have seen some fast improvements: renewable energy use, gender balance, community investment. But there is places where, on the environmental side, things are becoming more challenging. Waste generation, water consumption, and emissions. And again, with declining ore quality, you just have to mine more rock to get the same amount of metals. So this is a key challenge, and the industry really needs to focus on as well to continue the kind of public support for a very, very important space. So I hope that was interesting. If you want to read more, please check out our reports on the website, or please come find me later, and I'm happy to speak anything through or talk through anything else. Thank you very much for listening, and thank you.